Good afternoon, everyone. Good afternoon, Manoj. How are you? How was your week?
Hey Mukund, I'm good. Week was really good. I missed out certain things and then I captured again. So week was good. Hello everyone.
I did very well on three. Riot eventually broke out. I mean, we mentioned it a week ago.
Finally ratted.
We mentioned it was tightening up, tightening up. Mara
Yes.
continued to do well. Rivian just kicked it out of the park for me.
Yeah, I saw that too.
Rivian was very, very good for me.
Mm.
And then, the one that didn't do well, I took a trade but didn't go anywhere was Lululemon. But it's okay. It's still
You win
time.
some, you lose
Needs
some.
a little bit more time, I
Yep.
think. And then the ones from before, Delta Airlines continuing to do well. I'm not going to touch it. I'd mentioned it. You had mentioned it just a few days or something, either before.
I think it was June 18th or somewhere. So I have been actually eyeing it for almost a month now. So if you look at the longer term picture, it has been forming a very big diamond the monthly chart. So normally it should have looked like, it should be a breakdown, but diamonds are very typical, wherein it can break out as well as break down. Most of the times from the tops, it breaks down and from the bottoms, it breaks out. So in this case, it has actually broken out. And after that, the rally has not stopped. I think 36, 38 is where I started eyeing it. And then from early 40, it just started and there is no stopping as of now.
Yeah, I bought it in the 42 range and 50 in 10 trading sessions. Perfect. And
Wow.
it's slow and steady every day. Down market, up market, didn't matter. It was just grinding up slowly.
Yeah.
It's always good to have a stock like that. Very predictable.
Absolutely.
Awesome. So let's have a quick summary. We're going to start with our usual format for people that are joining new. And if you join new, please subscribe. We start with a quick overview of the markets from the last week. We go through SPY, QQQ, and the IWM, which is the Russell 2000. Then we go through what we did well and not well last week. And then we'll talk about earnings. This week we only had one, so it should be quick. And then what are some of the earnings next week if you're watching? And then what are some of the stocks we are watching next week? So let's start with Manoj, SPY, IWM, and QQQ. How did we do for the week? We tended up okay.
1 minute. I was just looking at my chart. Is my chart visible?
Yes, it is. Okay. It looks beautiful, actually.
Beautiful at the same time scary. Let me say why I'm saying this.
Getting further and further away, man. But it is what it is.
Yeah. So I don't know why some of my things are not visible. Give me 1 moment.
There you go.
Okay. So so last week I was expecting a buy on deep on the market, but there was some very obvious thing which I missed out, which was double top here. So if you look at the last to last, I think it was on Friday, 16 June when market made a high of 4998, was it 4993.75, and this week it was 4998 and 994. So it is kind of a double top. I was hoping that we would actually, inch past this and then start, then maybe some correction, and then again start rallying in. But I did not notice the double top, and then we started correcting. There is another very key factor that needs to be mentioned here is the momentum fading away. If you look at this, MACD is not making a new high, whereas it has made a new high, which is momentum in the negative territory, which means MACD is diverging negatively as against the new high made in the ES. At the same time, whenever we see 20 MA, which is this line, give me 1 second, let me just hide this.
We hit the 20 MA, it seems to be bouncing.
20 MA here. I'm sorry, what?
Soon as we hit the 20 MA, it seems to be consistently bouncing off of that.
So that is something that I would like to differ here. So what happens is whenever there is too much of divergence, so too much of gap between 20 and 50 MA, and the curve is sharper for the 20 MA, there is every likelihood that sooner or later we will actually try and hit 50 MA as well. So my bet is that we are actually headed for the 50 MA reversion now and not just 20 MA. Maybe in the next week itself, we should be trying to break down a 20 MA and try and hit 50 MA, which is also this, if you see these dashed lines, this is not a final confirmation of a rising wedge. but looks like we are in the formation of a rising wedge, wherein it would also be touching the lower end. Sorry, 50 MA on the lower end of the wedge as well.
The
So
50 MA
probably
right
somewhere
now,
here around 4300 or 4250. So if, for example, here, somewhere like here around 4300, wherein it also covers the gap of 4304 to 4327. This gap at the same time we also touch lower end of the wedge, and we also touch the 50 MA. That is the key area for us to watch. Would we bounce or would we break down of the wedge? I have no idea, because the wedge is still not completely formed, and probably we would try and hit one more high. Probably, I'm really not sure about, because what my experience tells me is, if it is actually a bull market, after 20 MA reversion, we also hit 50 MA reversion, and then we attempt another new high. If that is the case, probably somewhere around here, 4300, we will hit 50 MA as well as lower end of the wedge, and then hit somewhere around 4500 or maybe beyond 4500, trying to touch maybe the upper end of the wedge.
which
And
is
that should
4500,
be,
yeah.
that should be one confirmation if we are actually completing the wedge or not. That is the time when I would say that, yes, we are actually completing the wedge. And if that wedge is forming and it's completing, then definitely we would actually hit a breakdown as well. Rising a wedge breakdown is a bearish scenario. So this first sign would be lower end of the wedge and the 50 MA both. That's where market should be able to stabilize and then give us some sign whether we want to go lower or whether we want to go go up again from here. So my two key points would be, sorry, three rather, not two. Lower end of the wedge, 50 MA, and the gap area.
So all three of them indicate to you that we should be heading lower next week from the 44 range to the 4250 range.
4250 probably may not come. I think somewhere around 4300 we should stabilize, because it won't be one single line that comes to 4250. It will be here, 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 like this. So somewhere around 4300 we should be able to stabilize.
Got it. Okay. I actually, let's go back to that chart really quick. The one other thing I wanted to ask you was, what if it bounces off of the 20?
So there are two reasons why I'm not, why I'm very, very skeptical that it would not bounce off the 20. Because if it had to bounce, yesterday's bounce around the close market, it should have stabilized today, and the candle should have been green. One. Second, the formation of today's candle is actually inverted hammer, a bearish sign.
Yeah.
So forget about the name of the hammer. I mean, let me explain it in a very simplistic way. When you look at all these candlesticks, look at it like a balance of a weighing scale. Whenever there is upper end of this line is called as a weak. The blank area is called as a weak. When the upper end is completely sold off and there is hardly any body left in the candle, that's a sign there is a selling pressure at the upper end. As against a candle somewhere like this. So you see this candle.
Yeah.
Forget about this. This candle, the candle next to it, it's a hammer here. So there is lower wick, by very big wick at the lower end, and there is buying pressure coming at the bottom end. These kind of candles normally result into buying pressure at the lower end, and this kind of candles indicate the selling pressure at the upper end. So always look at, people might want to call it as a hammer, someone would call it as a shooting star, someone would call it as a doji. All these are names. These candles, of course, they do matter, but for the people who do not want to get very technical and just want to look at it from a supply and demand point of view of the buyers and sellers, just look at it, the amount of pressure that you have it on the candle. This says there is a selling pressure at the upper end, and this says there is a buying pressure at the lower end. So I would say that this inverted hammer is actually a negative sign, and we should actually see a selling pressure emerging again next week, unless we try and consolidate. Now, as I said, two things about the gap between the 20 and 50 MA on the daily chart is actually not a good sign, and it should result into selling pressure, but not necessarily always a selling pressure. If markets are really in a healthy bull market, it may not actually correct much. It might just consolidate. What if market consolidated between 4500 and 4370? If this consolidation continues for next 2-3 weeks, then this gap between 20 and 50 MA would actually narrow.
No, I was going to
that
say,
would actually have a good sign.
the other thing I also noticed was end of day sell-off today. It was a very strong market for most of the day, and then at the end of the day, it seemed to suddenly have a sell-off, right?
Absolutely.
One of the okay,
So,
all right, let's keep going to QQQ.
sure. Again, similar sign, double top, 20 MA, 50 MA gap, very huge, and there is every sign that this should result into some kind of sell-off. If you look at the candle, same sign. It's a selling pressure at the upper end, and the way market sold off at the last hour, it's a sign that market does not want to go higher and it wants to go lower further. There is a small gap between 14,650 to 14,540. So that gap will also get covered up.
So this inverse hammer, last candle on NASDAQ, is telling me that the bulls tried to take it up, but then ended up at the lower end of the market anyway, right?
Yep. And here is similar to ES, it is also forming a rising wedge, but not a very peculiar rising wedge. It's kind of a channel. So, yep.
In the 1400 range, I would say 1400 to 14,000 to
14,540.
14,100, yeah.
Yeah, 14,500 kind of a level. So that's where, 20, 50 MA will also somewhere around come closer to this lower end of the wedge, and we should be able to bounce. I would not call it as, resuming of the old bear market, because that doesn't look like so.
Yeah. Okay. And
Small
then
cap.
we're on to Russell 2000. We talked about the box, and it's out of the box.
Yeah. So as I was saying that, whenever markets rally and small caps participate, that's the sign that, markets want to go higher. As of now, it still is healthy. It looks like, it might consolidate between 20 and 50 MA and then again bounce back. But there is a risk because, it has not been sustaining about 20 MA. That's one sign. Also, if it actually wanted to make another high, then last week it should have been able to hit higher than this level. So higher, this was 1929 and this was 1919. So it did not go higher than 1929. If it was actually healthy, then it would have actually tried to hit above this, which did not happen. Now, the risk would be if we hit lower than this. This level was 1825. Are we making a lower low? As of now, no. But what if next week we do make a lower low? That would be a sign that market wants to go lower and not higher. Now let me just go back to a weekly chart here to get a more perspective. So give me 1 second. Where is the 200 MA? It's here. Okay. So we are still struggling to hold just about 200 MA on the weekly as well. It is actually not a very good sign, because the more we are struggling around this level, the higher the risk of we breaking down instead of going back up, because we ended up higher, but we again failed to maintain the higher level. So I'm a little skeptical the way markets are moving in the small cap indexes. Maybe next week gives us a better strength, but I'm really not sure as of now. Let's see what next week holds.
Yeah. Yep. I think, just looking at that chart, it seems as if I would have expected them to do much, much better, at least IWM, compared to NASDAQ and also SPY. But I guess that's the way the market is still telling us they're not ready yet to participate in the rally, I guess. So
if we have to kind of relate it to this, let's relate all these technical charts to what the macro scenario is telling us. Markets bounced off the June and September lows to where we are right now, from 3,500 on the ES or S&P 500 to 4,500. That's like 1,000 points. Macro scenario definitely has improved from 8 or 9% inflation to around 4%, 5%. But have we gone back to 2%? Not yet. Has rates hiking cycle completely stopped? It is a pause as of now. But have we completely stopped? Not yet. Also, what happens to employment scenario we saw today? What happened to economic cycle we saw in the last a few days? So macroeconomic scenarios are pointing us towards some kind of a cooling off effect. Whether this cooling off effect goes into recession and stagflation kind of a scenario, we don't know, but it looks like we are actually heading for stagflation, and that is the reason markets are finding it difficult to go higher. Stagflation is not something, some kind of a healthy scenario for anyone to be cheerful about, and that's the reason market does not want to go up. So let's see.
Okay, so let's share really quick where we are overall. in terms of last week versus this week. Just to give you guys a little bit more context, we had 5 very good stocks that we were following. Chewy, which is Unity, Chewy, Lululemon, Snap, Mara, Riot, and Rivian. For the week, 50% up for Rivian, 37% up for Riot. Both of these.
Some rally. Rivian and
Riot. Mara had the previous week, they had done very, very well. So we had mentioned it continuation. So Mara did very well the previous week. And then you can see that here, it's up for the month by about 50%. So we've been here for quite a bit of time. Snap seems to lose momentum a little bit. They ended up at exactly where they were for the week. Lulu, I think, still needs a little bit more time. I was hoping to actually keep it for a little bit more, but I think I'm going to continue on with that. Chewy lost a lot of momentum. I was very surprised with Chewy and with Unity as well. But for the month, they're still up a little bit. So I assume that they're just taking a little bit of a break, because Unity actually had a bad week compared to where I thought most of the other stocks were. Most of my other stocks that we followed done fairly well. I think we're not too bad. The only earnings that we had, I was even remotely following, was Levi's. Let me just give you guys a quick update. Levi's reported earnings of 4 cents per share, and it was about $1.3 billion on revenue, anemic growth. They were expecting 3 cents a share. So overall, Levi's did kind of beat earnings estimate, if you will, and the stock essentially has gone nowhere. It had a little bit of a sell-off in the last couple of days, but not by a significant amount. And today, it dropped by nearly 8% for the day. So after earnings, big drop. Missed the, and they also expected to be able to guide higher. They didn't do that as well. So Levi's had a poor week, if you will, overall. 10%, nearly 8% to 10% down for the week. Just quickly mention some of the earnings that are coming up next week, if people are following. I'm not going to follow any of these in detail, but the only thing I'm expecting is Delta Airlines, but I already have a position there. I'll sell off my position before earnings. That's my working model right now. But Pepsi, Wipro, WIT, PEP is with Pepsi, JP Morgan and Wells Fargo to the end of the week. So on Friday is when the financials start, and then we start the cycle again. JP Morgan, Wells Fargo starting next week. Then later part of the week goes even higher than then. So let's quickly walk through some of the stocks to watch that are on the list. SMCI was the first one. So this is an AI stock. I'm still not clear where we are in the AI cycle.
I'll share my email instead of my chat. Give me one moment.
No problem. I don't know where we are in the AI cycle overall, but
you know it better because you have been tracking it. I'm not AI expert, but if you ask me about the charts, I can give you some analysis based on the charts.
Yeah, double top again.
Double top and look at this gap. I mean, so there are two things. One is this thickness of 20 MA, and another thing is while the stock has made a double top, momentum has not made a double top, which means that is the first sign for you to be careful about on this stock if you are holding it. If I was holding it, I would definitely get out of the stock here. I mean, maybe look at it when the stock reaches maybe 50 MA or when it tries to close this particular gap. This is the area where I would maybe look at buying the stock in case market still looks healthy. But as of now, if I was holding the stock, I would get out.
Yeah, SMCI, I think overall has had, it's a very, in my mind, this is a good short opportunity, but AI is a very risky bet right now.
Absolutely.
On the flip side, if you look at, I was looking at the NVIDIA chart, it's tightening. And I think there's another leg up for NVIDIA. So Supermicro was the first one. Square did very, very well today after a big dip yesterday. Square is Block. SQ is the name of the ticker symbol. Block is the name of the company. This is the company that makes the Square Reader and also the app that allows you to be able to make payments. I moved my money from PayPal to Block.
Yeah, that's interesting. I saw your tweets and I was still wondering. I mean, you, I think, mentioned it last week that you were long on PayPal, and you said that you probably should be moving. And you
nowhere. PayPal is going nowhere, man. I bought it at 63, 64. It's at 68 in 2 weeks, and I'm like, I'm done with this. It's like 5% in 2 weeks. A waste of my time.
Yeah, absolutely. Why do block the money if the stock is not moving at all? Yeah. So this is Square. So far it's forming a bear flag, to be honest. Although it's moving up, but it's in the formation of a bear flag. It fell down a lot and then continuously rising up in this channel. As long as it is rising in this channel, you would want to hold the stock, but be very careful as if it breaks down of the channel, get out. So my stop for the stop, if I'm holding, I would actually hold with a stop of say 63, 64. That should be my, if I'm holding the long.
Did well today. I made good money on it.
It rallied today
But
by
I'm
what?
not sure whether I'm going
2%.
to.
Yep.
Okay, and the last one is last two actually. We got Hood, Robinhood.
Yes.
Did we mention it last week? No, we did not.
No, we did not. But I think we should have spoken about this stock at least a couple of weeks ago, maybe last week or last week. It has broken out big time in the I think last week when it was around 9th June. So almost a month ago, it broke out, back tested, and then again rallied. A very healthy sign, although it is still inside this bear flag, but I would say it is still it is it has some more legs, probably around 11 kind of a level, 1140, 1150, and I would say it would not stop here. Probably the final stop should be somewhere around 1270.
Yeah,
so 1250, 1270 is where I would try to book it out. It has it has momentum in its favor, and it has all that it takes for the stock to keep rallying on. So
tell me something.
I would book
no, why don't you put volume also?
I normally don't track volume much because it hasn't given me much. Give me 1 second.
Really, everybody just says track.
Sure.
I'm curious as to why you don't track volume and price. You only track price, and everybody has a different strategy. But that's interesting.
Yeah. So the reason I don't track is because many times people say that if it is volume based rally, then that's when you should be actually more bullish upon. Whereas I have seen many times, even if it is not a volume based, stock still keeps going up and going down. For example, volume here and volume here is far more different, right? The stock still rallied, stock still moved up. If my chart is telling me that stock, so volume and then MACD, RSI, these are all secondary indicators for me. My primary indicators is my trend lines, my moving averages, and the way the candle is forming. If all these primary indicators are telling me that the stock is going up or going down, I would rather rely on my primary indicators rather than relying on the secondary indicators. Volume, yes, matters. Momentum, yes, matters. RSI, yes, matters. But these are secondary indicators to me. If my primary indicators are telling me that I know I should be bullish, secondary indicators might give me a warning sign, but it may not always be right. Primary indicators will already give me first sign that whether I should be holding the stock, buying the stock, or selling the stock. So I normally rely on the primary indicators, and secondary indicators I just keep an eye on, but don't make my decision based on the secondary indicators.
Yeah, no, that's good. I think we talked about IWM already. Watch it a little bit more carefully. Overall, your sense is next week the markets are going to test a little bit lower. Is the sense I get, right? And so just be careful overall, just to make sure that everybody realizes what we are expecting is next week is going to take a little bit of a breather, and the interesting stocks that will continue to do well. I've been looking at it for quite some time. Will be stocks that I've been following overall, but also I think markets overall maybe a good time to buy some puts. I've not done it yet, but I'm going to consider going into the put.
I'm holding short. I'm holding short on ES. I shorted it around 446.7 or something like that. So I'm holding my shorts. Let's see how markets behave on Monday. Looks like a small gap down. It's not very big, but that looks like a gap down on the Sunday when futures open. So I'm keeping my fingers crossed on the short side.
Thank you so much, Manoj. Thank you, everybody. Please don't forget to subscribe to our channel, and feel free to leave us some comments. We always appreciate that, and we also respond to all of our comments. Thank you, everybody. Have a good weekend.